Good afternoon, everybody. I'm Cindy Brief. I'm the CEO of the Coral Springs Coconut Creek Regional Chamber of Commerce. I want to thank you for coming to our first webinar today. I heard Ian speak last week at a webinar with the Bar Association, and he had so much valuable information that I spoke with him about speaking to our group. And I really hope that you can listen to this, and we will reserve time at the end for Q&A. And if you see there's a Q&A button, you can send us questions and then Ian will answer them. So welcome to our webinar, and I'm going to hand it over to Ian Berkowitz.
Hi, good morning, everyone. Good afternoon. I appreciate everyone being on the line for the webinar. My name is Ian Berkowitz. I'm a business and corporate attorney. I practice in Boca Raton, Florida. I've been practicing law for the last 28 years. And my specialty area is transactional work, buying and selling businesses, regular corporate governance, all kinds of business activities such as agreements. And my really subspecialty is corporate finance, both in debt and also equity. I'm a former SBA attorney. And so when stuff like this happens, and ultimately we get into these kinds of scenarios as far as SBA and SBA financing, it's an area that I've dealt with a lot. So it's something that I really love doing. It's something that I'm very passionate about. And so I'm happy to share the information. Okay, so let me get into this mode. Oops, hold on one second. So I can deal with the next page. Okay, here we go. As I mentioned to you, I'm a business and corporate attorney. I used to practice law for the Small Business Administration. I started with them in 1992 on the disaster relief division, doing the kind of loans that we're dealing with right now, the EIDL loans, as well as personal property loans for both businesses, as well as personal, individuals with homes and renters in 92 on Andrew. I then moved up to Washington and I stayed with the agency for another almost 4.5 years. And I dealt with, at that point, every type of program that the agency had for small businesses, for women-owned businesses, minority-owned businesses, African-American-owned businesses, as well as hub zone-owned businesses, anything that was a certification. I then learned securities. I was general counsel for an institutional broker-dealer with 3 offices. I did have a radio show on NPR, and the bottom line is on corporate finance, which I think is the most important part of operating and owning a business. Over my 20 years in private practice, I've raised over $100 million for businesses, both with loans as well as investors. So it's an area that I know very well, whether it's disaster related or, more importantly, if it's strictly dealing with growth and expansion of businesses. I do it for all kinds of different businesses and all kinds of different industries. And I'm happy to present to all of you today. Let's see, there we go. The things that we're going to cover are the 4 main financial situations that our people are looking for guidance on when it comes to dealing with figuring out how they're going to get money. Now, right now, we're in an unprecedented time. The situation is that I don't think anyone can ever have imagined your business or your employees to have to go through this kind of a situation. And so we're relying, obviously, on different organizations, and let alone the government, to provide a mechanism so that we can truly put some money in our pockets and help us to be able to keep our businesses open. As a business owner, we know that there's 2 ways to deal with it. We either can deal with debt, or we can deal with equity, which is taking money out of our personal accounts to keep our businesses afloat. The government, in this case, is dealing with proposing some kind of a relief, just like they have in the past, whether it was the 2008 economic crisis or other time periods historically where we've dealt with a situation where the economy was so bad that we had to come up with another mechanism to be able to help businesses. Large corporations have dealt with bailouts before, whether it was the auto industry or certainly the financial sector industry. So given this situation, there's no doubt that we were very fortunate, and certainly Congress was willing to then say, all right, how do we deal with making sure that our small businesses, which there are approximately 30 million throughout the entire US, how do we make sure that they are getting the relief that they need in order for them to be able to continue? And the primary issue that we're talking about is really dealing with how to make sure that not only can the businesses stay open, but they also have the ability to be able to um, deal with paying their employees. The lifeblood of our business is quite often our employees. There are certain industries that are very employee driven, especially in the hospitality industry, where we're dealing with, keeping everything from dishwashers to the back of the house, as well as to the front of the house employed. In this case, those are, I would say, the largest, the hospitality industry, whether it's hotels, restaurants, bars. Those are the ones that are getting hit substantially hard because they have large payrolls. But it could be a business that, is a smaller business, whether it's a law firm, whether it's a physician's practice. It's still equally important to make sure that all of these businesses have cash flow, or more importantly, they can keep their employees paid, because otherwise employers are going to potentially, either be let go, terminated, and then that will have an effect on our unemployment compensation rates. It'll have an effect on us being able to execute our business strategies and to deal with our businesses. So there's no doubt, I'd like for everyone to clearly understand that this is unprecedented. I think we all know that there's nothing that you could have done differently in order to plan for something like this and the circumstances related to it. But fortunately, we do have a few programs that we're going to cover today that does deal with putting money into your pocket, at least to deal with short term, making sure that you have money available, and that money can be utilized to deal with payroll and keeping your employees going. It does also deal with covering other costs. I'll tell you what it does not cover is really does not cover a lot of the long-term planning, and we'll talk about that towards the end, because all of these relief programs are really dealing with relief that you're going to deal with keeping employees paid, keeping them on your payroll so that when things change and we're able to get back up and running, they're still working with you. They haven't collected unemployment. They're still part of your team. And more importantly, what I think most employers should realize is that by you taking these steps to do these kinds of things and getting these short-term funds that will go towards the majority going towards payroll, you're going to create a substantial loyalty between yourself as well as those employees, because employees are going to look at this as a mechanism to figure out how and where they're going to be able to stay. Do they want to stay with you? This is a defining moment for you and your business, as much as it is a defining moment when it comes to dealing with your employees, seeing how you act, what you do, and potentially can they count on you and rely on you. And so that's the reason why I personally believe that when it came to dealing with the government putting something together, especially under the PPP program, that really is driven on the pay and the incentive and the employee, as opposed to the overhead expenses. The goal is to make sure that people stay employed. Obviously, we know the numbers. Unemployment has skyrocketed. So the goal of this program, in addition to any other programs that the government is doing, especially for large businesses, is driven on the employee side of it. Okay. So these are the 4 programs that I would tell you can immediately take advantage of, and they are available. One is called the CARES Act, and that was the one that was passed just this past week, and that was the number of the $375 or $367 billion that we're going into, and we're going to cover that. We're also going to cover the SBA Disaster Relief Loan Program. And as I mentioned before, for those of you who are here during hurricanes or are used to dealing with SBA loans or FEMA coming in, FEMA comes in when a disaster hits, but they primarily coordinate the kind of cleanup efforts and coordinate all the agency to give relief. And they do have some grants available, but the bulk of the money, I would say close to 90% of the money that goes out to individuals as well as businesses, are in the form of disaster relief loans. And those are what we call, there's 2 types. One is called the physical injury portion, and the other type is called an EIDL, which stands for Economic Injury Disaster Loan. And so the one that's really applicable here, because we don't have a physical disaster like a hurricane or a twister or something, is the economic injury. The third one we're going to talk about is the Florida Department of Economic Opportunity. This is the one that came out really, and we're very lucky that this one came out immediately, and our governor really took the bull by the horns in being able to move forward, is to initiate the Small Business Emergency Bridge Loan. And it is exactly what it's titled, which is it is not meant to be a long-term solution. It is meant to be a short-term, put money in your pocket to deal with your immediate financial needs. It's a loan we'll go over, but it is intended to be repaid within 12 months. And if you don't repay it, there are substantial penalties because it reverts to an actual term loan and with a high interest rate. And then the last one is what we've heard, which is part of your application for the disaster relief loan, the EIDL loan, and you would check a box and elect to do that, which is the Economic Injury Disaster Loan Advance. It is in essence a grant that in essence you can elect to get from the government when you apply for your EIDL loan. You could either apply for it directly just by itself, or you can have it as an advance towards your EIDL loan while you wait for your EIDL loan to process. The Economic Injury Disaster Loan will be something that hopefully they'll be able to get you that money quicker as opposed to the money that you would be getting under the EIDL loan. So let's talk about the first one, which is the CARES Act. That's the Coronavirus Aid, Relief, and Economic Security Act of 2020, and it's also, the acronym is the CARES Act. And it is a comprehensive $2 trillion emergency assistance program. It's basically for individuals, families, and businesses. And the businesses, it has both for large business, small business. As you know as well, there's also components of it for dealing with unemployment compensation. There's tax relief. There's also relief of these checks that you're hearing about, the $1,200 checks going out to individuals, as well as the $2,400 per family that's going out. So it's an extremely comprehensive bill. And the fact of the matter is that it is the single largest aid and emergency assistance relief act that Congress has ever dealt with. And I don't think it's going to be the only one. I think it's going to be one of a few more, because as this continues, if it does continue, there's going to be more relief and more assistance. And as we go through it, you'll understand that this assistance is only really to be used for a certain period. So that's why I estimate that this is going to be something that's going to go far beyond the $2 trillion. It's really meant to deal with preventing workers from losing their jobs. This is for small businesses, a real focus on payroll. It's a real focus on driving business owners to be able to get money, of which can be forgiven if in the event that it's used for payroll, because the government's position is in the event that we're dealing with payroll and you can keep your employees paid, then we will not only lend you the money, but we will forgive that money, because the goal is let's not put everyone on unemployment, and let's not get them to, push our system of unemployment compensation. Let's keep them employed. And really, it's an economic stimulus program, and that's the reason why. So it's to retain, rehire, and restore pay. And it does provide, because Congress understands that if you're dealing with a program, paying your employees is one thing, but you have additional expenses that you need to deal with, such as keeping the lights on, so to speak, or keeping the rent paid. Certain states, I think New York has already said, and I've got a client up there that has contacted me, that believe it or not, there are some landlords that are sending notices out that if you don't pay rent by April 1st when they were due, that they were going to start a 3-day eviction. I will tell you right now that New York, for example, has signed into law that no new evictions can be filed within the next 90 days, especially based upon businesses that have been impacted from the pandemic. I can guarantee you that most other states will legislate that as well. But for most of my Florida-based clients here, I can tell you that most landlords are not taking an aggressive position to deal with that. Under the disaster relief loan, which is the EIDL loan, that is the one that you apply with directly to the government. That is the SBA website, that is the SBA package. So let's talk about that loan. That loan program gives you potential proceeds up to $200,000. Now, that is an underwritten loan by the SBA, and it is to evaluate your economic injury. And when you go over, in essence, the application, there was, in essence, in the beginning of them announcing this, there were multiple forms that you had to use, a Form 5, a Form 1368, a Form 413, which is a financial statement, a Form 2202, which deals with your schedule of liabilities. All of those forms were utilized. Now they've streamlined the process. Most everything is done now via the web. You're going right on their website. There may be some additional things and additional criteria that they may deal with on that, because that is it's generally a different process, a longer process. But I think for the purposes of where we are right now and the government's need to get that money out there, they have determined that they're using the streamlined form, and that's what you're getting. So it's up to $200,000. It is a loan that has a 30-year maturity, and the rate is for 3.75%. For nonprofits, 501c3s as well as 501c19s are also eligible. And that rate for the term is 2.75% for the nonprofits, the C3s and the C19s. And it really is meant same thing as the CARES Act, to deal with employees, to deal with payroll, and as well provide some money for overhead expenses as well as employee benefits. The third one we talked about, which is the bridge loan. Now, again, a bridge loan, think about its definition by name. A bridge loan is just basically taking you to a point of which you're getting a different loan so that you can deal with that other loan. And that's exactly what it's intended to be. So the bridge loan is that. It's meant to be a short-term loan where you're going to deal with looking at other mechanisms. Now, if you look at the actual application from the Department of Economic Opportunity, it does show that. It shows that in the center of that application, I don't have it here, but if you go on floridadisasterloan.org, you can download the application there. And on that, right in the middle of the first page, it says, how are you intending to pay this off? And it has there federal assistance, private funds, disaster loan, all of those other options, line of credit. So they want to know that you know that this is a bridge loan. It's not meant to be long-term. It's meant to be used for a certain period of time of which you're going to be able to get some other loan to deal with it. So they want to know, is it based upon a federal loan, your own private loan, potentially insurance proceeds? So up front, you're going to indicate to them how you intend to deal with repaying that loan. And so that's the goal. Each business is eligible up to $50,000. It is no interest for 12 months. However, if it is not paid off at or before the 12 months, a 12% interest rate kicks in. And that would be, in essence, continuing until you do pay that back. So again, it's not really meant to be long-term. Now, some of you may say it's better to get 50,000 even if I'm paying 12%, because if I use my credit card and I deal with other things, I may be paying 18%, 23%, 29%. And for those of you, that may be a realistic and a reasonable situation. So if you do need it and you do want to make sure that you deal with it longer, that's fine. Just make sure that you understand that that's what it's going to be, and that could be the liability afterwards. All right, there we go. Now, under the CARES Act, when you are applying, these are the things in essence that you are going to be getting based upon coming up with your loan amount. You're going to take into consideration compensation, and that's salary, wages, commissions, or even cash tips if in the event that you're in the hospitality business. You're also going to be dealing with any vacation pay, parental, family, medical, or sick leave. That's all considered benefits. So if you have an employee that decided on taking vacation pay during that period of time, right now, you're going to continue to pay, and that's going to be eligible under this act. Allowance for dismissal. If you did let someone go, or you dealt with a separation, and there's a severance package you gave to someone, that will be calculable in the payroll. Any payments for group health insurance. So in essence, anything that you use in payroll, which is a benefit to the employee as well as the actual compensation, is really included. Whether it's medical, whether it's retirement benefit, as well as taxes. Those are all going to be things that are going to be calculated for purposes of payroll, and that will be what you're going to be applying for when we're using the calculation in order to figure out what your loan amount is going to be. These are the ones that are not going to be considered under payroll. Anyone who receives $100,000 or more, if in the event that it is compensation, that's payroll, you're only going to calculate the first 100,000. So let's just say that you as the owner take $150,000 in salary. When you are calculating your loan amount, you will only be able to get compensated up to that $100,000. You cannot calculate the payroll number in anything that's over $100,000. So if there are multiple people that are making over $100,000, at least as far as payroll is concerned, for purposes of calculation, you're going to only calculate up to the 100, and everything that's over that 100,000 will not be excluded for purposes of payroll. Certain taxes that are either imposed or withheld will not be calculated for the payroll number. If you have employees who do not reside in the US, so if you have employees that work remote and live in other countries, you do not calculate their payroll and their numbers when you're calculating your payroll numbers for your loan amount. And if there are certain qualified sick and family leave, which you get credit under other areas, including the Families First Coronavirus Response Act, then that would be not calculated. I don't know many people who have that, but if you do fall into that category, do not use that as the payroll calculation. Now, these are the actual things that you're going to be able to utilize the proceeds for. Remember, we did talk about payroll, and that's the driving force. However, you can use the amount related to dealing with some other things. And that calculation, if you haven't understood it or heard about it before, is you're going to take all of the numbers that go into payroll on a monthly basis. You're going to take the entire last 12 months, or you can calculate from your 2019, and then you're going to take the average monthly payroll cost and multiply that by 2.5. So why do they do the 2.5? Well, they do the 2.5 because you're really going to be focusing on when you get your money, 2 months of actual expenses. And these are the expenses of which you're allowed to deal with the 2 months of. Now, the goal under the program is the 2 months is really calculated on the payroll. And then the 0.5, which is really 20% additional that they're giving you beyond the payroll cost, is really meant to be for these other things. Now, what are the other things? Payments of interest on any mortgage. That's in the event that it's not your residential mortgage, but it's if you own your office condo or you own your building and you have a mortgage payment, the interest is allowed to be paid based upon the money that you get under the CARES Act. Rent, if you rent. Utilities, and that could be all utilities, from phone to electric to water to gas, any kind of utilities you can use this money for. Interest on any other debt debt obligations. If you have lines of credit, if you have inventory that you pay for based upon on a bank loan, any interest payments you can use this money for in order to make those payments. So when I say you can use the proceeds, you're going to make an application. You're going to use that multiplier for 2.5 for all of those payroll costs. And then you're going to now take that money that you get when you get it from the lender. And these are all of the things that you're able to and allowed to utilize the money for. So that's why we say, what are the proceeds used for? These are the things that you can use your loan proceeds for. What are the interest rates and fees? Okay, so the goal, I think most people are telling me when I deal with this program, is that they want to make sure that they get all of this forgiven. And there's a next slide, obviously, that we're going to talk about where we identify how you're going to get the loan proceeds forgiven. And that would mean that as long as you can identify and show the government that you used it the way that it was supposed to be used, they will forgive the money. And therefore, whatever money that you received on this loan will basically be a grant. It'll be something that you'll not have to repay. However, let's just say that you use it for something other than the utilities, the rent, the mortgage interest, as well as the payroll. If you do use it for something else, then this is where it turns into a term loan. And the term loan is 2 years, and the interest rate is 1%. I will tell you that this interest rate and the term has fluctuated. When I did this program last week, the guidance is that it was going to be like a regular 7A, an SBA 7A loan, where it would be for 10 years and at an interest rate no more than 4%. And the legislation has that it can't be more than 4%. But when the SBA produced and finalized their final rule, they put an interest rate of 1%. So it's a very low interest rate if in the event that you have to use the money for another purpose. But in essence, the government's application, and more importantly, the lender that you're going to be going to, is relying on you to be able to use that based upon what you've said you're going to use it for, which is payroll, utilities, and rent. If you do need to use it, or there's a reason why you use it for differently, this is going to be the repayment. There is zero loan fees, so there's no out-of-pocket and expenses related to it. There is no prepayment penalty. If in the event that you have a certain amount that you're going to have to pay over the period of time, then you can pay it off at any time. There is no prepayment penalty. When you get this loan, there is no payment for 6 months. However, we're going to get into the loan forgiveness portion, because that would be done after the first 8 weeks of when you get the loan. But either way, if in the event that you don't apply for forgiveness, you have no payments on the loan for 6 months. And again, the goal is to get the loan forgiven. So just remember, the issue is you want to make sure that you are keeping track of what you need to do after this loan and the loan money comes to you. You got to make sure that you have good books and records on the portion of which you're going to be applying for forgiveness. And that's going to be critical to make sure that you know exactly what you need to do and submit back to that lender who you're getting the SBA loan through, so that they understand that you use the proceeds according to what it was required for, and that those proceeds were dealt with for payroll or for rent or for utilities, and the law allows for that to be forgiven, and they will then enter into and forgive that portion. I will say, and I threw in there, that could be additional legislation. Right now, there's nothing that's pending, but I think that Congress is also dealing with the issue that payroll in and of itself and rent and utilities is not what my business needs only. My business definitely needs working capital, and it needs some additional dollars to reopen, to restock, to get inventory, to make sure that I can do some marketing and advertising as soon as this all passes. So I do anticipate, and I am hearing that there'll be some additional legislation so that businesses really can have additional cash available to do those things. But right now, that's not what's available, and that's not the guidelines under the existing act right now. Now, when you get your loan, assuming that you get your loan, you're qualified, you get approved, and you get your money. So over the next 8-week period, once you get that loan, in essence, you then need to then calculate how you're using it and make sure that you have proof of how it's being used in order to deal with forgiveness. So in essence, it's going to be the payroll cost over that 8-week period, as well as any of the mortgage payment interest and any of the utility payments or any of the rent. So over the 8 weeks is the critical period of time of which, when you get that money and it's now in your pocket and now you need to disperse it, okay? If you've let all your employees go, but you know that this was an employee program, then you're not going to be able to get that forgiven, and you're going to owe that money to the government, because it was really supposed to be for payroll. If you don't pay rent, if you don't pay interest or your mortgage payments, remember that 8-week period is how you're going to identify the forgiven portion. So when you get that money, my advice to you is use it exactly how you've certified that you are going to use it for and intended to use it for. If not, if your circumstances may have changed and you don't want to use it for it, then you certainly can use it. However, you're not going to get it forgiven. Now it's a loan. And for some of you that have substantial payrolls, I mean, I'm putting in applications that, are for $800,000, $600,000, especially for hospitality and restaurants that have, 20, 30, 40 people that are on payroll. If you take that money and don't use it for its intended purpose, don't have any payroll after those 8 weeks, that's going to be an issue for you to be able to get it forgiven. And that means that you've now added substantial debt onto your business. And that's not the intention of the program, nor should it be a goal of yours as a business owner. How do I get forgiveness? What you do is everything under the PPP goes through a SBA lender. So you apply directly back to your lender who you received the loan from. And when you do send that package for forgiveness, here's what you're going to need. You're going to document the number of employees on payroll, the pay rates, including the tax filings, and any payroll or uninsured. You're going to show exactly how that money was spent. So if you have let's just say that you have a payroll company or a PEO or an employee leasing company, make sure that you get all of that documentation to show that all of those payroll costs were taken care of and they were done. Make sure that if you made payments under your mortgage obligations, your lease and utilities, you have the backup showing exactly what was done. These are the bills. If your landlord invoices you, then in essence, you would submit the invoice along with a check that has cleared showing that that was the case. If you paid utilities, you'd show the bill and you'd show the payment. If you did it online, you'd show the payment. If you deal with bank account records, what I'm telling my clients is to take your bank account, especially if you deal with things online and you transact online, you'll be able to identify the payments over that 8 weeks that went to FP&L or to Tico Gas or whatever your utility provider is. Same thing for cell phones, same thing for water, all of that kind of stuff. Just show the proof of the payment and it will be forgiven. I would tell you this is the most critical part. The application certainly is important, but many of you, I know, want that forgiveness. And if you don't deal with submitting the right documentation, the lender and the SBA will not forgive that portion of the loan. And then there'll be a certification that says that all of the information in the documentation you're submitting is correct and accurate. And when you do that, you're going to be in a position to get that loan forgiven. Think about what this forgiveness is. So if you're a business that's applying for $100,000 or $150,000 based upon your payroll and some of your additional expenses, if you 8 weeks later deal with applying for forgiveness, you've received $150,000, you've paid your employees, you've paid your rent, you've paid your utilities, and now you can get that forgiven. It's in essence free money. And so, I can tell you, as much as, I try not to, make people understand that there are handouts available. This ultimately can and will be a handout if in the event that you apply correctly, and more importantly, you send in your information related to the forgiveness correctly, because the government has given you the money, you've used it towards your business, and now you don't have to repay it. So in essence, it's like a grant, and it turns into a grant. For those of you who, in essence, are thinking further down the line, which is the way I'm having all of my clients really think down the line, okay? I'm getting them to understand that you've got to talk about and think about and plan when you reopen, how you're going to reopen. You may have to rehire people. You may have to retrain people. You may have to shift your business model. You may have to deal with getting inventory. You may have to pay creditors and suppliers because you haven't over a 30-day or a 90-day or a 120-day period. You need to think about your long-term goals as well. And if you do think about them and you do need extra money, most people I know to go to a credit card or something that's a very high interest. My recommendation is you look into an SBA loan. Now I think is going to be a great opportunity. These lenders who are giving you the opportunity for dealing with the PPP program, they will also be taking applications for SBA 7A loan program, which is the largest and the most well-known SBA loan program that there is. I don't want to spend a lot of time on it, but I definitely want to say that conventional lending is extremely challenging and difficult. It has a lot of requirements if you're going to a regular standard bank. So I am a major, major fan of the SBA loan program, not because I worked for the agency, but I've seen what it's done for my own clients. And a lot of my business practice is helping clients get SBA loans that I've been dealing with for 20 years. And as a business attorney, I think it's the most important part of what I do, because when people want to buy a business or if they want to grow and expand their business. I'm working with them each and every day to make sure that they have the capital that they need to do those things. And I believe that the SBA loan program is one of the best programs out there. You can use it for doing everything. You can refinance debt, you can acquire inventory, working capital, real estate, buy a business, get furniture, fixtures, and equipment, anything and everything that you think that your business needs, and to either grow it, expand it, and start it is what you can use the use of proceeds for. The underwriting criteria is far greater and far better than regular conventional lending. It's a situation where there's no doubt you can definitely deal with getting it. Now, why do I say that? Because credit score is not as important. Collateral is not as important. And why? Because this is, as well, a government guaranteed loan program. So just like PPP program, is 100% guaranteed government program to the lenders that are lending the money out there under SBA guidelines. The 7A program as well is a government guaranteed loan program, which means that the government is in essence your rich Uncle Sam, and your rich Uncle Sam is going to be the guarantor, so that if you don't pay or something happens and you can't and you default on the loan, the government will pay the lender to make sure that the lender doesn't lose the money on it. And when that happens, in essence, you'll still be able to move forward, with your life based upon it happening, because the government is going to take care of that liability for you. Now, the underwriting criteria is much less. I've dealt with lots of loans, both conventional loans as well as SBA loans, and there's no doubt that you have the ability to deal with an SBA loan far more easier and far more getting an approval under an SBA loan than you would on a conventional loan. Amortization on an SBA loan is 10 years. The loan rate is prime plus the maximum, which is 2.75. Some banks use less than the maximum. I've dealt with loans that have been prime plus 2 or prime plus 1.75, but prime now has gone down dramatically. It was in the 5s a few months ago. It's now down to 3.25. So you're talking about, in essence, a 6% loan, and you can get maximum amount of money. The SBA loan program goes up to $5 million. And of course, that's going to be based upon the amount that you're requesting is based upon your cash flow and your ability to repay it. And so it's a great program to use, but there's a lot of money that can be borrowed. There are definitely talks as far as raising that all the way up to, say, $10 million. It's something that you should consider, and it's something that you should consider long term. One thing I do want to mention that that I don't think I touched on, under the CARES Act, under the PPP, the maximum amount that you can get based upon your payroll under that plan is up to $10 million. So that means that if you have a business that has even $2 million in payroll on a monthly basis, and some small businesses do have that, if you have that, then you can technically apply for $5 million, which would be 2.5 times. So, they have raised the standard SBA loan program is generally it's capped at $5 million for 7A and $5.5 million for 504 loans. But under PPP, it's been risen to up to $10 million. The goal is, I think, Congress is hopefully going to look at and see if they can raise the cap on the 7A loan program to potentially be at that $10 million number as well. That would be great for businesses in the future. And as I said, that there's very little reporting requirements. Most conventional loans, you have to deal with making financial filings, monthly financial filings or quarterly financial filings with those lenders. Sometimes they have restrictions as far as you're transferring ownership or changes of management. With SBA loans, none of that stuff is going to be applicable. How does the PPP loan coordinate with any existing loans? Well, if you are an existing SBA loan person and you have an existing loan, you can still apply for PPP. However, if you've applied under the EIDL loan program, then you cannot apply for the same thing. So if you dealt with your EIDL application and you've applied for payroll and you've gotten money for payroll and for rent and for those things, you cannot apply for both loan programs for the same proceeds. If you're using the proceeds from the EIDL loan and it's going to payroll or utilities, you cannot apply for PPP. But if you have any of those other loans from those other businesses and those other loan programs, you can definitely apply for it under PPP. The last thing I would say, which I've mentioned before, is that 8-week cover period. You can use your PPP loan to cover payroll for it, but you cannot use a different SBA loan product for payroll under the same period. So let's just say that you have a line of credit, an express loan, which is a line of credit under SBA guidelines. If you were going to be using your express line, you would be using your express line for payroll and for other expenses under a different period and not the 8 weeks that you would be dealing with under the PPP program. So the goal is use the PPP program and its proceeds for those 8 weeks right afterwards. All of the other loans and all of the other money that you have available, push off to save after that money is dried up, and more importantly, after that 8-week period that you would be dealing with in order to get it forgiven. A lot of people have been talking about the economic injury grants. And so this is in essence the last thing that I want to cover, which is how does it work with the economic injury grants? Well, the economic injury grants are applied directly with the SBA. If you go to the SBA's website and you apply for it on their website, which is really under the economic injury disaster loan, you can elect to get the grant. In my opinion, there'd be no reason why you shouldn't elect to get the grant. And the rule says that if you apply for an economic injury disaster loan and even get denied, you can still keep the grant. So there's no doubt that you should all be applying. It's $10,000. It may not be a lot to sustain your business, but for those of you that have small businesses and deal with a $10,000 grant, that would be extremely beneficial. I would definitely deal with applying for the EIDL loan. You don't necessarily have to take the loan even if you get approved, but at least you'll be able to get the grant, you'll be able to get the $10,000, and you can do that. Now, if you do deal with the EIDL loan, same as the PPP, there is no debt payments on that loan for 6 months as well right now. And in essence, that loan under the PPP is forgiven, but under the economic injury disaster loan, that loan is not going to be forgiven under the grant. Let me cover that again. If you get the grant under the EIDL, it doesn't have to be repaid. If you get the EIDL loan, then that is something that will have to be repaid and that will not convert. So if you haven't applied for the EIDL loan or you haven't applied for PPP and you are just looking to deal with payroll right now, rent and utilities, my recommendation would be apply under PPP directly from a lender because that has the opportunity to be forgiven. If you apply under the economic injury disaster loan, that's the one that's a 30-year amortization at 3.75%. That is not forgiven. However, the grant is. So the grant will be forgiven. I guess now I want to just turn to what I think should happen and what you should do. So, you know, the goal of this program, and let alone what you should be doing now as a business owner, is to calculate what loan best works for you. If you feel that getting a loan over a 30-year amortization at 3.75% makes sense, and you want to deal with other things other than payroll, then go to the economic injury disaster loan, okay? Apply for that because that may be the best bet for you, and that would include a $10,000 grant. If in the event that your concern is just to really dealing with the maximum amount of payroll expenses, and you're very top heavy, meaning that you have payroll as your really largest expense, and you want it forgiven, and you're only interested in that 8-week time period of which you're going to be able to then get it all forgiven, then apply for the PPP program. If you've got a great relationship with your lender and your lender is going to take your application and you're going to be dealing with that application and they're going to see it through and push it through for you, absolutely stay on top of it and absolutely move it forward that way so that you'll be able to deal with getting that application submitted, forgiven, and then approved and getting that money. And then you'll work on having that 8 weeks of expenses covered with all of the documentation so that you can also get it forgiven. What I would tell you is, again, this is the best time to look at your short-term as well as your long-term goals and needs, because that should be a determining factor on what you apply for, including you thinking applying for 7A, which may give you additional working capital and additional money, okay? One of the things that the 7A program has done through the CARES Act is they've expanded the express line portion of the the SBA loan program. It used to be capped out at $350,000, which is a line of credit. Under the CARES Act, they've expanded that to $1 million. So now the express line of credit is now up to $1 million, which would be a tremendous program for many of you to take advantage of that you should potentially apply for. I would also tell you that these are the most important documents on any loan that you're going to deal with in your lifetime, if not certainly on a business loan, making sure that you have current and up-to-date profit and loss statements or income statements, as well as balance sheets, having a personal financial statement as well for yourself or any owner that owns 20% or more of the business. So if there's an owner, if there's 50-50 or 3 owners at 33, every owner who owns 20% or more, I would make sure that all of those owners have an up-to-date and current personal financial statement. And when you're doing that, if you're married, please make sure that to include your spouse, especially if you're dealing with joint assets. Most people don't realize that if you're married and you've got joint assets, then both of the individuals have to be on that application, because obviously those are not just owned by you, but it's jointly owned, and your spouse would have to sign that personal financial statement too when you're doing that. Business tax returns, personal tax returns, as well as knowing what your debt is on a monthly basis. Those are all things that should be dealt with, and those should be your documents. As a business and corporate attorney, I work with and teach my clients all the time. You know, the lifeblood of your business is having good corporate books and records. You always want to know where your financial position is every single day. If you're like me, you go to the bank account every single day and see what's there to make sure you know exactly what your cash position is for the day. And having documents that properly reflect that are very, very important. So it's really important that you deal with that. And then I would tell you, which I think a lot of people are really going to be doing this anyway, especially maybe some of you that are interacted with your banks and they haven't been positive interactions, but find a reliable banker. Ultimately, the relationship that you have as a business owner is really based upon a good banker who in essence is your partner, because you know your cash flow and what you have access to for purposes of credit is the lifeblood of your business. And if your bank is not really your partner or doesn't see themselves as your partner, I would tell you, you should really upgrade your banking relationship. You know, banks nowadays, and, you know, I know that banks are very involved with chambers. I mean, listen, I do a lot of business with banks related to, you know, me doing loans for my clients as well. So banks are definitely important, but they're also not all, they're all not the same. And I would tell you, in my personal opinion, and this is not, you know, I'm not endorsing smaller banks or larger banks. I'm just simply saying in my 28 years of doing what I'm doing, both on the government side as well as on the private sector side, having my own firm, I would tell you that the smaller banks are the ones that give you more personal attention. There are some exceptions to the rule. Some of the larger banks do have great business bankers, but I find that, you know, they change often, branch managers change, they don't necessarily stay, they get bought out. So it is challenging sometimes to potentially develop a relationship with a large bank. And I think that many of the people who I've spoken to, including maybe some on this program that are listening, you've had some challenges in dealing with the larger banks, that they're not taking applications, or you've been told your relationship is not as important as you know it has to be in order for them to accept your application. So I kind of see that there's going to be a major shift after all of this happens, and people are going to start to realize that the convenience of having a branch around the corner is less important than having a banker or a bank that is truly your partner and shows you some loyalty when it comes to dealing with, you know, troubled times. You know, we all get, I always say that I get judged best during the challenging times with my clients as far as how I can offer my assistance, as opposed to the easy times when things are all great. So my last slide really talks about if any of you are interested in contacting me, my email address is up on the slide. my paralegal, who really works with me on any of the emails that are incoming, especially now, given the circumstances and all the emails that I'm getting. Her email address is up there. That's my office number. My office is in Boca Raton, but I have clients actually all over the country, so I'm happy to work with any of you. For additional information, I would definitely be on the congressional websites. Ted Deutsch has got a great website. Ted is a phenomenal resource, and he's a super nice guy. Marco Rubio's website. Marco is as well. He's the chairman of the Small Business and Entrepreneurship Committee. He's got lots of resources, and his information is great, as well as Rick Scott's. So I would go there for additional information. You can go to the SBA website, and on the Florida Disaster Loan, that's another way that you can get information. It also has all of the criteria necessary related to those loans as well. So that's all the information that I have. I have no problem as well, as I get information from multiple sources as well. I will certainly, if you want to email me and I have some additional updates, I have no problem emailing out, or I can get it out to Cindy and get it through the chamber, so that I can help you and make sure that you have as much information and up-to-date information as you can. I do want to especially thank not only Cindy for the opportunity and the entire staff at the chamber. I also want to thank a very personal friend of mine and someone that I've known since high school that I care about deeply, and certainly is an excellent attorney as well. Andrea Jacobs, who I've known for quite some time, who is the reason why I'm here as well, and who invited me along with Cindy. Andrea, thank you for the opportunity, as well you, Cindy, for the opportunity. I hope again to attend one of your programs, and if I can be any additional assistance to any one of you, please don't hesitate to contact me. And I wish you all the best of luck. I mean, you know, just like everyone else, you know, we know that this is not going to last forever. It is the most challenging thing that I think we're all experiencing, not only as business owners, but just individuals, on how we're dealing with people and families and everything. So, you know, do your best to try to stay focused and try to keep things, understand the big picture. The big picture is, your business could be the largest asset that you have, the most important thing that you've got going on, besides, of course, your own health and your family. And make sure that, you plan accordingly. Don't wait, don't stop, in what you're doing, but make sure that you're doing what you need to do, so that when all of this ends, you're back up and running, you're in good shape, and you're easily able to deal with moving forward. So I am going to stop sharing the slides, because I think we're at the end of that. And then I'm going to start looking on in essence, the chat. So Cindy, if you want to come back on and go through some of these with me, I have no problem being able to go through them. Let's see. All right, so I'm looking at some of the basic ones right now. When we reach the end, 11 questions, Q&A. Okay, yeah, so you can definitely do that. And Cindy, if you want to handle and take over and reading some of these questions, I have no problem being able to do that. As to copy of the presentation, I will definitely make that available. I'll send it out, and then Cindy will be able to deal with being able to get it out to you. Let's see, slides will be on the home page. Thank you. Can we have the address? I don't see any specific questions related to dealing with any of this stuff. So unless there's any.
We have about 17 questions in Q&A.
I see. All right. So I do. All right. So I popped up my other screen and I see it. All right.
Want me to read them, or are you?
Yeah, Colleen, if you own a business and apply for PPP, can you also apply for it under a company that's owned by your business? Yes. So there is something called affiliation, and you do need to acknowledge on your PPP application if there is an affiliation. Now, for every company that has a tax ID number, you can submit your own application for. But you have to disclose if there is an affiliation issue, because affiliation is important for purposes of determination that your business is small. So to answer your question, you can apply for 2 companies, but you should disclose, in essence, that there is an affiliation between that company and the other company. And that's actually, I think it's question number 3 on the PPP application, which is that you have to disclose any affiliates, and you'll do it on what we call, I think, is an addendum A that would be attached to your application. Wells Fargo is not taking apps. Do you know if they will be reopening? What I do know about Wells Fargo is that they have a specific criteria for taking applications. Now, I definitely have heard that, they said that maxed out. I don't know. Remember this, banks are, listen, they are conduits for the SBA loan program, but they are businesses just like every other business. And so they're making a determination on how much time and effort they want to potentially deploy in this and what they're willing to do. So maybe in a week from now, they may make a determination. Not every application is going to be approved. There is a criteria, and you need to potentially be approved. So maybe they'll do a first wave and a first round, and they'll reopen. If I were you, I potentially find some alternative banks, go on SBA's website, and they have, if you go to the SBA loan program, you can go and figure out what the SBA lenders are. I also share with you that you need not go to a lender that's around the corner. There are a lot of SBA lenders that lend all over the country. So try to find a lender that will lend even though they're not in your backyard. We tend to always be focused on the ones that have branches near us. But there are plenty of SBA lenders that don't even have branches that you could potentially deal with.
And when we spoke yesterday, I believe you mentioned an online bank that you had said may be valuable to our members.
Yeah, there's a whole bunch that you can deal with. There's 44 business credit. I mean, I can provide you a list of which you can deal with, but I would probably recommend that people go to the SBA website. I mean, there's 44 business credit. They're out of Philadelphia. There's New Tech. There's Live Oak. There's lots of other banks that are out there, and all of that you'll be able to get from the SBA's website. Jody, we have already been told that their funds already been allocated. Are there other resources? Same kind of question. Go and try to find some of these other places. Eligibility status for companies with foreign owners. Okay, so that's a great question. So if you are legally allowed to own and let alone work, then you're eligible. So, if you're a green card holder, and as long as you've got workers here in Florida, you can apply, okay? Many clients have been shut out of the CARES loan. Banks claim they've hit their max as soon as Saturday. I would tell you this, banks are pretty much saying that because in essence, they're overwhelmed and they want to narrow the amount of loans that they do. And without going into a lot of the details, let's just suffice to say that the banks are not making a substantial amount of money on these loans, and that's why the larger banks don't want to dedicate a lot of resources to it. Unfortunately, I'm going to be blunt and honest. So knowing the program and knowing what they make on other loans, this is definitely not a moneymaker for them. That's the reason why. Go and try to find the smaller banks and the alternative banks and call them, let them know that you want to see if they are lending. And then I would tell you that SBA is also approving additional banks that have not historically been SBA banks to administer the program. So you may see that there's some additional banks that are going to be popping open. I will say this, a lot of the banks are using the know your customer. There's some federal laws related to banking that in essence, you have to do a background of your customer to make sure that, that they're not in violation of things called Patriot Act and some of these other areas. Most banks are using that as a cover to simply say, well, we haven't done a background and we don't know you, so therefore we're not going to do business with you. I will tell you that as of this morning, the U.S. Treasury put out guidelines related to that. And the guidelines did say that if in the event that someone is not under that act, which is that know your customer, they still have authority under the Department of Treasury regulations to be able to then still do business and underwrite those loans. So will that in essence, persuade some of these banks to do business with you? Right now, it may not, but ultimately it may in the future. So we'll see what happens. Michael, my understanding is that proceeds forgiven will not be taxed. Yeah, so it is a loan. If those proceeds, in essence, if you got loan proceeds and it's been forgiven, it's not income to you, so it's not going to be taxed to you. What happens if you don't get the loan from the bank under the Paycheck until June 30th, which is a deadline for employers to hire back. Do you still have 8 weeks from the date the money is dispersed? Do you pay your, yeah. So the way that, again, the way that it works is that from the date that you get the loan, okay, when you're applying, you have up through June 30th to have your payroll back in shape. Okay, so if you're pulling people back in, they need to be hired and they need to be on your books, because the goal is that they think that all of these loans are going to disperse no later than July 1st. Okay, if that's the case, that's the period that they have right now for you to be able to rehire and get your payroll back in shape. At that point in time, the 8 weeks start when that loan disperses. So that's in essence, when you're going to be dealing with the forgiveness portion, it's 8 weeks when you get that money. The goal is that you need to have those individuals on payroll by that time period, and you need to be paying accordingly. So the payroll records are going to match, in essence, the estimates as far as how they calculated your loan proceeds. Neil, we are closed. We're close, and my employees are asking whether she'd apply for unemployment. Should they get it through the, that's going to be, Neil, up to you. If you have the capability of being able to keep them employed right now, even if that means paying them something as opposed to nothing and then waiting for the payroll, the PPP proceeds to come in, then you can do that. If you send them to unemployment temporarily and they do get benefits and you rehire them back, that's another option as well. But the truth is the unemployment benefits may not come in as fast as people think they are. So you may want to hold off if you think that you'll get this money, or you've got some cash available, and that cash you can use to retain the employees, even if that's at a lower amount, and then you can get them back up to speed at the payroll numbers that you're used to, then you can deal with that afterwards. So my recommendation is to deal with, keeping them on, or at least making sure that they're on by the time that you get those loan proceeds. Presentation, how does a PPP work when they're saying that you can pay your employees 2 weeks salaries and be deducted by your tax credit? Not necessarily understanding your question, Neil. It's really based upon an 8-week period of time. And as far as an IRS tax credit, again, I'm not understanding exactly what you're talking about, but remember, if you pay your employees, okay, on any period of time and you get this loan, the forgiveness portion is going to be what you've been paying them after you get the loan. So if you think that you're going to take the money and pay yourself back for how and what you kept them on payroll before you got the money, it doesn't work that way. The forgiveness portion starts to kick in after you get the money and how you use that money, because how you use that money is going to be the sole criteria on whether or not it's going to be forgiven. So if your goal is to get the money based upon what you put down as your estimate on 2.5, and then you get the money and you're going to put it in your own pocket and you're not going to rehire anyone, or you're not going to deal with payroll afterwards, then when you have to apply for forgiveness, you're not going to be able to be forgiven, because you'll in essence have paid yourself back, as opposed to making sure that the money went back into the pockets of your employees, even though you may have paid your employees from the past. So they're really looking, the operative period of time is that 8 weeks after you get the money. It says we have non-essential business with 14 part-time employees. We can be completely shut down and won't open. Payroll is essentially paused and we are closed. Our rent, however, is substantial. Can we qualify? You can qualify under CARES, but like I said, the payroll and the forgiveness portion is going to be the most critical portion. So rule of thumb is that on the forgiveness, 75% of the total loan amount that you get has to go towards payroll. Otherwise, if it's not, then that portion is in jeopardy of not being forgiven. So, if you don't have payroll now, but you get people on payroll as soon as you get your money and you put them back on payroll, make sure that out of those proceeds, 75% of those proceeds are going to go to that payroll, because that's going to be the largest part of that forgiveness portion. If you don't, it just won't be forgiven and you'll end up having to deal with it as a regular loan. Are there lenders?
Want me to read them to you, Ian? I will.
Sure.
We have a question from Randy Abramson. Are there lenders accepting PPP applications even if you do not have an account with them?
Yeah, that's the ones where, again, if in the event that you don't have an account with them, they are nationwide lenders. They don't even really have branches. They're basically lenders. And so, yeah, they may not have the same requirements as the regular lenders.
If I applied for the payroll loan through our bank, where would I apply for the grant?
The emergency grant is applied for directly from SBA. So you'll go to sba.gov. You can apply just for the grant, or you can apply for the EIDL loan. But if you've applied for the PPP, then you'll be limited on your EIDL loan based upon what you've already applied for on the PPP. So you can apply for the grant.
I applied for the EIDL loan through the SBA, and I only want the $10,000 grant. I don't want a loan that I need to pay back. I got a confirmation that my application was submitted. Did I apply to the right place for that?
Yeah, if you got a confirmation that the application was submitted, that's fine. Now, when that application is reviewed, and if in the event that you've been awarded and the loan has been processed and approved, then you'll have your choice. You don't necessarily have to take the loan, but if it's offered to you and you choose not to, and you just want to keep the grant, you could do that as well.
Okay, we have under this application for EIDL SBA $10,000 loan grant, have you heard of anyone receiving any funds yet?
Yes, I have heard of people receiving funds.
Okay. How can real estate agents take advantage of the different programs? Which one would be better suited? Thank you.
Okay, so right now, the only thing that you can apply for is if you're a corporation or sole proprietor. Independent contractors, the opening for them to apply is going to be April 10th. And that may be moved depending on how the banks are doing on this portion of the opening. So anything that was a business, the queue opened April 3rd, and independent contractors apply on April 10th. What you're going to be doing for that process is deal with all compensation that you've taken in. Really, it's not in the form of payroll, but it's in the form of you having been paid, which is your compensation. So you'll be dealing with filing your own application, and based upon your own application, you'll be able to make an estimate based upon your eligibility. It's going to be your total compensation that you would have received as a 1099, and you'll use a multiplier by that, and then that will be the loan amount that you can apply for. Like I said, those applications are right now, based upon the legislation, they're to start as of April 10th.
I think this is pretty similar. I have a small business where I 1099 my employees. Do I qualify for any of these loans?
You cannot. The answer is you qualify. However, if your entire payroll, in essence, is 1099 employees, you cannot use that compensation to calculate your 2.5. So independent contractor compensation is not to be included on your application for PPP. So your best bet is to go to the EIDL loan along with the grant, because you cannot really apply under PPP with a substantial majority or all individuals working for you that are all 1099.
Okay. I am the sole proprietor of an S corporation, and it's only an employee. Do I qualify for the loan?
Right. So first of all, as a business attorney, your question as far as being a sole proprietor or an S corp is in essence an inconsistency. If you are a sole proprietor, that means you don't have an entity. If you are an S corp, that means you do have an entity. So you actually are not a sole proprietor. You're basically a corporation of one. To answer your question, in essence, as long as you have payroll and you take payroll and you file your payroll and you have a payroll and you have a 941 quarterly reporting as well as a 940, yes, you can apply, and you do qualify for both PPP as well as for economic injury, because your business has the ability to apply and get a loan or a grant under the EIDL loan.
Okay. Please list the website. It's going to be on the Chamber website, which is www.csccrchamber.com. This is from Sidonia. I own my own business and I'm a 1099 employee. How should that be handled?
If you own your own business, I'm surprised that you are taking all your compensation as 1099. I would speak to your accountant and potentially change that in the future. But the fact is if you are a 1099 and don't have any wages, you can only apply for an EIDL loan. You really can't apply for anything under PPP.
Okay. The guidelines state that you need to have an account open 2/15 to utilize that bank.
I haven't heard that. I know you need to have your business open and be operating in a business by 2/15. I don't know what guidelines you're referring to. You need to be in business by February 15th in order for you to be able to apply for the loan. If that, you may be talking about something that a bank specifically is making as their criteria in order for them potentially to loan to you. If that is the case, then you should go to one of the banks that you don't necessarily need to have an account at in order for you to deal with applying under the PPP program.
Okay, my clients are almost exclusively community associations, condos, HOAs, etc. These are Chapter 617 not-for-profit corporations, but many have employees. Do you have a position or know of any guidance on which these entities qualify for PPP or EIDL? Thank you.
EIDL does take applications from nonprofits, so you can apply to EIDL. The loan amount is 2.75% amortized over 30 years, and that's under EIDL. Under PPP, the only nonprofits that can be applied for PPP loan is 501c3s and 501c19s. So my suggestion is if it is a non-for-profit, maybe the EIDL loan is going to be the best mechanism as opposed to PPP.
Okay. Are credit unions making loans under these programs?
Yeah, credit unions, some credit unions are SBA lenders as well. And I think that there's a lot more that are becoming SBA lending just to be able to deal with getting loans. So yeah, there are some. Look on the SBA's website under the lenders and you should be able to find credit unions. I don't know if yours specifically is. I know down here we have Space Coast and others. I don't know if they're an SBA lender, but check on the SBA website.
Okay, for those of us who have home offices, would mortgage, interest, or utilities for the residential property be a forgivable expense under these programs?
You know, it's an interesting question in a sense that, you know, it depends on how, in essence, you even file your business tax return. So if you're an entity and you do deal with all of that as a business expense, then I would say give it a shot. However, if you don't do that on your business entity and now all of a sudden, you know, because you are going to either provide a financial statement or a tax return, if that's not on there and it really is not something that you put on your business tax return or on your business financial, I wouldn't all of a sudden do it that way, especially if it really is your home, because there's allocation issues. Obviously, it's not fully deductible. So it really depends on, you know, how you file your tax return for your business and let alone on your personal side if you do those things.
Okay. Are there different opportunities for women-owned businesses?
No, there are not.
Okay. Barry Spiegel said, great presentation. Thank you. We have Marilyn Rodriguez. Is the 2.5 payroll the max I could ask for?
Yes, it is. Right now it's the max.
I have an employee that leaves voluntarily for another job and I replace that employee during the time period. Will that departure of the employee be counted against my forgiveness?
Well, it's going to be at the period of time of which you're going to be dealing with your forgiveness period, which is those 8 weeks. So if there was an employee that left and you've substituted that employee, your head count is going to be the same because that's how you're going to deal with your calculation is your head count as well as your actual the actual expense that you're going to be paying. So it'll be a wash, so to speak.
Okay. Is it possible to apply through more than one institution for the same program?
No. The EIDL loan program, you go directly to SBA. And for PPP, you go to one bank. If you have multiple applications, and I believe actually on the application, it does say if you've applied. So you need to first acknowledge it if you made application under other programs. But I would highly, highly recommend you not applying to more than one lender because it'll be a problem. And that's in essence fraud, so to speak. So we don't want to get anyone to deal with fraud.
Okay, we have Andrea Hammer. I'm an S Corp paying myself a monthly salary. Which is best to apply for, PPP or EIDL?
If you have W-2 wages and you have monthly salary and you're an employee, then in essence, you can apply under PPP. Remember, EIDL is not forgivable. The only thing forgivable under EIDL is going to be the grant. So if you only just want the $10,000 grant and you want that to be forgivable, that's fine. However, if you really do want your full salary over the 8 weeks to be forgivable, then there's no doubt I would use PPP because those full 8 weeks will be fully forgivable.
Okay. Have you heard of Apple Pie Capital? Is it better to use a third party?
I have not heard of Apple Pie Capital.
Okay. I own my own business, sole proprietorship. I have 0 employees. What would be best to apply for?
I'm not seeing where you're getting some of these
Oh,
comments.
I scrolled down a little bit because we have a
Right.
lot.
I have my own business, sole proprietor. I have 0 employees. Yeah, if you have 0 employees, idle is going to be your best bet. If you don't have any payroll, then I would deal with idle. You can, as a sole proprietor, still deal with PPP, and you'll have to just put the compensation that you have. But I want everyone to understand, if you take distributions out of your business, distributions are not considered, in essence, the kind of compensation that they're going to be allocating, because distributions are really profit in a business.
Right.
And so, profit is not what you're dealing with on a payroll program. You're dealing with actual payroll, whether it's commission or whether it's taxable W-2 wages. So in essence, my recommendation is, if you go the idle route, you're dealing with what your total income is, you're dealing with what you generally take in on a monthly basis, and then they're going to be estimating what your monthly carrying costs are in your business and underwrite it as it would on a regular business loan to see what the economic injury has been. You'll also have on the idle to do a narrative as far as what the real economic injury has been, and what is it going to take, and what's it going to take to get you back up and running. So that application is different, and you're asking for different monies to deal with different things. Again, PPP is really payroll driven, and it's just to deal with certain things. The forgiveness is dealt with rent. It's dealt with mortgage insurance if you own your business property. It's dealt with some utilities and payroll, but it's really payroll driven.
Okay, Robbie, in other words, if I retain my employees, can I adjust the loan to the salaries paid after January 2020?
You can, however, they will look at remember this, they're going to look at your month, you're going to look at the last 12 months of your payments. And now all of a sudden, if you got all this money, but you reduced everyone's compensation, then your loan forgiveness will be reduced accordingly. So if the goal is I'm going to apply for a large amount because the last 12 months have been the larger amount, but yet when I get the money, I will have cut everyone's salaries and I've cut their pay, and I'll pay less so that I can keep some of the money. It doesn't work that way. It'll be discounted. That loan forgiveness is, they're going to look at what you in essence applied for and how much you applied for it, and they're going to maintain that, in essence, it was used towards what it was applied for, because that's how they gave you the money in the first place.
Okay, I'm just scrolling back up to one last question, and then I think we're going to have to close this. We own an orthodontic practice. In 2019, our employees were 1099s. In 2020, we had 15 employees with a W-2 since January. Can we still apply and use this year's payroll?
Yeah, so the rules related to what payroll you used is really, there's really 2 ways you can calculate it. You can calculate it from 12 months from the date that you're submitting your application, which would include the 2020 payroll, or you can include it based upon 19. In your case, if you've got a lot more employees on it since January, then I would do it from the 12 months prior, okay? Because the final rule does say it could be used for 12 months prior, or it could be used based upon the 2019. So in your case, I would use the 12 months prior. So when you're filling out, in essence, the 12 months, you're going to do the average payroll. So you'll take the first 4 months or 3 months in this calendar year, and the 9 prior months, and you'll use that to calculate your average payroll expense, and then divide that by 12, and then multiply that by 2.5.
Ian, I want to thank you so much for doing this. I can't tell you how much we appreciate this. This is such a hard topic, and this has been #1 on the minds of all our business owners. So I want to say thank you. I thank Andrea Jacobs for introducing us, and really appreciate everything you did. Julie just texted you in the chat and said that the presentation will be available online. And she also sent you Ian's contact information. So again, I just want to say thank you so much. And to everybody on this call, I know things are tough, but I hope we're helping and providing you with the information that we can help you with to keep your business going.
Yeah, let me mention Julie, if you could do me a favor while we are on, I did check, there may be one slide I may have to correct. And with the
Okay.
updated information, I may want to just put even some stuff that I got this morning that I didn't put on the presentation. So if you can hold off and just have it available, I'll email you an updated one tonight, and then you can have it available tomorrow, because then I can really look through the most recent stuff, because I did get a lot of stuff and I'd rather make sure that everyone has the most up-to-date information.
Sure. So I'll upload that new version when I get it.
Sounds good. Okay.
Thank you, everybody, for
Thanks,
attending.
everyone. I really appreciate
Thank
it.
you, Ian. I can't wait to meet you in person.
You got it. Thanks, Cindy. Take care, and everyone be safe. Bye-bye.